everybody. Welcome to another webinar of the Energy Delta Institute. Today is actually quite special, at least I think it's quite special, because Cyril is back. So we had him with our first webinar. We started off with Cyril Wittershoven from the Feroci strategic consultancy firm Feroci. He explained about the geopolitical angle regarding energy, and a lot has happened since we 2.5 months ago started this. So the second webinar we also did with Cyril, and that was more about the actual impact on on the energy market, or more specific. So what's happening? Where are we going? How does it look like regarding the pricing and recovery also? So again, before we start discussing this, because I am also very curious about your opinion about this, is if you have any questions, put them in the chat. So to go to webinar chat, I'll see them here on the screen, and we'll try to tell them to Cyril, and he will try to answer them. And if any other, just let us know. Cyril, so how are you?
I'm okay.
Yeah,
I'm okay.
Yeah.
The world is starting to reopen.
Exactly. Yeah.
Again, even that I think we still do not know what is going on and what will be happening, but the first doors are opening. We are able to go on a holiday again, which makes me happy, of course, but it's also a sign that maybe there is a slight release available now for oil, gas, energy, economic growth, but then economic growth from the point that everything went bust. So that will be a growth from a level that was much lower than we had. But life is interesting, the world is interesting, and
something's happened. No, I think it's interesting. The first time you already talked about the traditional oil and gas market, that there were some things already happening there, which sort of limited growth to a certain extent. Then COVID-19 arrived, Corona arrived, and we saw a slashing of demand. Everything went bad. So you told about, for example, the pricing, like $10 per barrel, that was in sight. So did that all come true, or what happened in your view? If you compare the situation now to 2.5 months ago, 3 months ago.
Then the situation is different, and it will be interesting to see what will happen next week, because then OPEC will meet, hopefully, because it's still not yet clear. Officially on the 9th and the 10th, OPEC and OPEC Plus will be meeting in Vienna, will be discussing either that they will keep to the production cut of OPEC Plus for the months June, July, and maybe August. That is necessary, because if they do not reach an agreement, we most probably will see the same hectic markets as we saw in March, April.
Yeah, because in March, April we had even negative pricing for the WTI in the US. Negative.
The negative prices of the WTI was an historical phenomenon. I think a lot of books will be written about it, because it was more or less a toxic combination of pandemic, an oil market in disarray, a geopolitical infighting inside of OPEC Plus, and then a combined approach to crush US shale. And at the same time, we saw the results of a mismanagement of oil and gas infrastructure, because WTI's negative oil pricing was not only caused by lack of demand and a crisis, but also because most of the infrastructure, the transport infrastructure, plus the storage in the US is focused around one single point called Cushing's, and if things go wrong there, then you have the situation that you have oil being produced, nobody wants it, you have futures that were meant to be cold, nobody wanted to do that either, you could not have a rollover which should have been possible to May and June.
Okay.
Nobody did that also because there was no availability, and in the end oil producers were even offering to clients to take their oil and they would be paid to take it. Well, that's an exceptional case. The situation now is reasonably different, even that I think that the optimism that I'm seeing is slightly weakened by the fact that demand is still not growing as fast as we want. Okay, it is growing, but it's not growing as fast. Supply has been cut.
Yeah, I was about to ask that. It has been cut in the US, so basically what you said about OPEC Plus, you know, that they sort of try to push out American shale. Did it work?
It worked, but as we all know, US shale is a very strange thingy. It's almost the same as Voldemort for OPEC. It's the thing you do not name, do not talk about, because if you talk about it, it will be there again. Cuts worldwide have resulted in the fact that the market has stabilized more than before. The good thing in a normal market is then that prices will go up slightly, and that more activities are again able to be done. On the other hand, and then I'm taking the OPEC Plus position, if a price is higher than 30, you have the threat that US shale operators and US shale investors are again thinking, because they're American. It's really something American. When there is a slight profit margin on the horizon, Americans will be hunting it.
But can they do that so quickly then? I mean, if you look at OPEC in general, it takes a while before they can do some steering, you know, with their supply. But these guys can just quickly come up and down. And
U.S. shale is not a national oil. It's not Shell. It's not Saudi Aramco. It's not huge. It's a private, small company. And they can decide Saturday evening after dinner, I'm going to open my wells tomorrow, or I'm not going to open them. So the danger for the market is that the price goes up faster than demand is growing.
It's recovering.
So then you get that supply again will increase, because the fact that US or non-OPEC producers have been willing or were forced to cut production is also more or less exceptional, and at least at the scale it happened, but they are all still not dead. They're on a life support, and with a little bit extra oxygen, the heart starts to be ticking again. And then you get the same, that we need to find the right equilibrium in which everybody is again able to reach the level that people can operate, but it should not be a direct threat again to the future that supply is increasing faster than demand because there is too much oil.
Yeah, but there's still too much oil.
If we do not watch out, there will be too much oil until the end of 2021, 22 even.
Yeah.
So prices are interesting, but too quick price recovery now could put the market, could put oil producers again under pressure.
Yeah.
And there is where, and if OPEC Plus is not showing a strong resolve next week, well, the bull market, and I'm a bull, could easily go into hibernation and we wake up the bear. Yeah.
But do you think that will happen? Do you think that next week they will be decisive, or do you think this infighting will continue? Because I don't think they made up and...
as long as Saudi is shouldering the largest burden, it's easier for the others.
Yeah.
However, Saudi is not able to do this for the next year or 2 years because they also are being squeezed. The main underlying threat that nobody even wants to talk about is what will happen after Corona, because in the US has already shown that when a crisis hits, unemployment can reach 30 or 35
40 million, I just read.
Million, which is
21% of the labor force.
Extreme. Yeah. And in Europe, we did not see that yet because we have all these government-induced subsidy programs. But if they end, are we then seeing an economic recovery or an economic slump that we did not see before? Because then oil or total energy will be facing a next crisis.
Maybe that's good to also angle, like, for example, natural gas. In Asia, we see that the demand is picking up. So also for LNG. Is that similar? Do you think that this is as vulnerable as oil? Is that because I think they were quite more stable. Of course, the prices are very low. They might go negative also. But what is your view on that?
Instability in the gas market is or has been normally less than in oil. However, we have now the situation that we have a Corona crisis and we have a natural gas supply crisis. There is not a lack of gas. We have too much gas.
So similar to oil, actually.
Loads of projects have already been delayed, except maybe even Qatar, because they have just
ordered lots of boats.
Ordered 100 new vessels. Which is maybe
bold move, I would say.
Maybe they understand when there is a crisis, you can order the same amount of ships against lesser costs.
That's
So, but it is a risk, and the gas price has been under pressure. Now, gas for the next years, I think, is not yet really going to reach negative prices. But if gas is going to lose the battle against wind and solar, or maybe in the not so fast future hydrogen, gas can go the same road.
Yeah.
Because it's
Carbon. Yeah.
carbon, it's being produced by the same producers.
Yeah. Yeah.
They have the same attitude. And in the US, the main gas producers are shale.
Yeah. Yeah. Yeah.
That's the same. So if shale is being hit, maybe for the gas price, it's a good thing because shale gas is not going to compete with the other gas.
Yeah.
Yeah?
It's also more expensive. Yeah.
But it's more or less the same situation right now. Demand for gas, I did not see going down extremely okay, of course. When
For LNG, I think it will.
yeah, okay. But that's take COVID out,
Yeah.
take a total lockdown out. Keep in mind it's going to be summer
Yeah.
in the largest markets, US, Europe, and China.
Yeah.
It's summer
Yeah.
now.
So no heating, not so much. Yeah.
No heating, except maybe airco.
Yeah.
Global warming, it becomes more warm, but demand will stay for the next 2, 3, 4 months at the level that it is right now.
So it's a bit safer, almost. I would say.
It's a
in the natural
little
gas
bit
compared to
safer.
Yeah.
The main issue for gas is that there is less profit margin on natural gas than on oil.
Yeah. Okay.
Yeah.
So that's So it's safer but less profit
It's
compared to oil at the moment. It's
No,
also-
it's safer. Now, yes.
Yeah.
Yes.
Maybe just you mentioned a little bit also the wind power and that kind of thing.
Yeah.
So the recovery. Yeah. So when we started this conversation a couple of months ago, everybody was scrambling from the government side to figure out a way to recover or to keep the economy at the level that we were in.
Yeah.
Well, that is quite difficult. Now we are further ahead. Do you feel that, for example, all this oil slump and gas slump also a little bit benefited the green energy? Because it's also a very large part of this recovery plans, at least that's the intention.
The verdict on that, I think, is still in the open.
Yeah.
If I look at the official plans of the European Union, of the United States, of China, of the Netherlands, they all talk green.
Yeah.
Post-corona should become green.
Yeah.
Yeah? Up till now, not one big package has been either discussed or has been agreed upon.
Yeah, that's except for the ACB buying program, but that's not.
Yeah.
That has no color. Yeah.
No. What we see, and I'm now looking at the figures of the IEA. Overall energy investment or investment in energy in 2020 is 400 billion lower than in 2019.
Yeah.
Now, if I put that against the first European stimulus program to help the European economy, that's almost the same amount of money. So that's a hell of a lot of money not being invested.
Yeah.
Now, the largest decline in investment in energy is in upstream oil and gas because they are hit the hardest.
Yeah.
Yeah. Now, still, renewables are also being hit. So on the total side, in 2020, investments are much lower than before. So that means we're lagging behind in every single strategy that we were following. Now to increase that, same that the IE is set to reach the level of renewables that we need to stay under the 2 degrees. We need to invest at least 613 or 630 billion dollars each year.
Okay.
Yeah.
How much are we doing?
Before 2020, we were doing 319 billion globally.
Yeah.
Now, if we now think that around, and I think I
saw it too.
have this
one.
If you look then in 2020, that's going to be 25 billion less than the 319. So it's 300. So we lack another 300.
Yeah, but relatively speaking, I understand your point. But relatively speaking, we see that oil and gas is hit hard.
It's hit.
But that will destroy some part of that chain, I would say, at least the growth part of it. Do you think renewables will step in that sense? Do we make more room for that, or is that a bit?
Yes. If we look at the hydrocarbon energy sector, people should always think about renewables are taking out hydrocarbon from energy. They are not taking out hydrocarbons. They take out the
energy part.
Hopefully, because up till now, not yet. They will be substituting hydrocarbons as energy. Now, 2020, I think for all that's not going to happen. Because hydrocarbon is cheap, which does not help. And investments are not there at all. So where we should be looking is after 2020. I hope, honestly, and even that oil and gas, and I know that people are smiling, even me, I hope that we will put more renewables in Europe in our energy system. That this will be delayed, that this will not be reaching the targets that we were thinking of in 2019. Be sure. Because when Corona is over, we will realize a lot of money is gone. It's gone.
But is that actually true? Because if you look at all this, I understand the point. But if you look at the amount, I also understand the point that it's not been approved yet. But there's about 2,000 billion euros available, 2,500, I think even. That will be handed out somewhere, so everybody will, of course, get a piece of the pie. I don't think the EU will sacrifice too much legacy industry that's already here.
No.
But a significant chunk of that could go into the renewable investment. So if that is true, if that's happening, then they will get a huge boost, I would say, compared to the traditional. If it is approved,
If they do a very smart move, and the rule is never lose a good crisis. this is a time that the European Union could, with a hell of a lot of money, could force Eastern European countries to make the switch from coal to renewables.
Or to gas. Natural gas. Yeah. I know it's not politically correct.
Trying to
no.
follow your...
This is my... I said it. I said it.
Okay. Or to start the energy transition.
Yes, exactly.
Yeah? This is going to speed up where we are.
Yeah.
For Germany, for the Netherlands, etc. I honestly do not think that a huge European program will be the key to change. We are doing it. We are on the road to it. We will make huge mistakes.
Yeah.
I am sure. Yeah. But without mistakes, you do not learn. And we have the financial capabilities to do it.
Yeah.
The rest of Europe not.
Yeah.
Poland, Czechia, Hungary, Romania, etc. No.
Yeah, which are, relatively speaking, a lot of emitting CO2.
And they are, relatively speaking, emitting a lot of things that we do not want.
Yeah.
Yeah. Now, so yes, there is a chance that it will increase. However, and you and me know that also, we think there is one Europe, there is not one Europe.
No.
The European Commission does not talk for Europe, is not stating the same as European countries.
Yeah.
And the European countries will need to decide where that 2 trillion
is going to.
Yeah. And everybody will have, there will be a lot of countries in 2021 that will have general elections.
So they all need to have a piece of the pie that they can defend at home. Yes.
There is still a lot of coal and gas in Germany.
Yeah. Yeah, okay, that's true. But I think, like you just mentioned, Germany is already on the path. They can afford it. They can afford to say we're not going to use that and do something else. But indeed, it's a risk, definitely. Maybe just to so recovery green, yes, that could happen. So if it might be the smart move to do it that way. But now, Corona, okay, I think we talked a lot about Corona. So, but there are other bears or other elephants in the room at the moment. For example, the US-China relationship. So things are spiraling out of control over there. So we have recovery in Asia. We still have a slump in the US and in Europe. And now they're fighting each other. What is the impact of that? What do you see in a couple of months happening for the energy?
If the crisis between the US and China escalates, and then I'm not talking about actions in the South.
No, not about fighting.
No. Trade blockades, sanctions, etc. That will have an effect on energy demand. Yeah. That will have an effect on global trade, on global economic growth.
Yeah, because that is also still not recovered. That global trading is not. I mean, China is coming up again, but it's not.
Global trade. There are a lot of container ships that have been sailing the seas without hitting a harbor. Because they were not allowed to go in. Global trade. What people do not understand, maybe, our global trade system has been hit by blockades, by lockdowns, by all of these issues. While we were used that everything was opening up.
Just in time,
Everything just in time, and everything was able to move from A to B.
Yeah.
Well, that's not the case. US, China, sometimes I feel I'm looking at two small children. If one is happy, the other one is unhappy, and both know that they need each other.
Yeah. So the interdependencies are still also on energy terms are huge. Or
Interdependencies are huge. Investments are huge.
yeah.
Geopolitical interests are huge.
Yeah.
Financial system is huge. American debt is in the hands of the Chinese. Yeah. But okay, technology is in the hands of the
Yeah.
US. But we have a US election, so it's time to have a lot of hard talks.
Yeah. Okay. Yeah.
And Mr. Trump will not be re-elected if he is going to be the smooth
Yeah.
version of Mr. Carter, because then he's not going to be elected.
Yeah. Okay.
Yeah?
Yeah.
So lots of hard talk, lots of crisis that can happen, and it will have an effect on global trade, because if there is a huge conflict between China and the US, it has a direct effect on ore, on the Chinese Silk Route,
Yeah.
because most of the investments go via US financial system.
Okay. For the
So
Silk Road,
the
Belt Road.
people forget most of the money.
Yeah.
Even money of Iran goes directly or indirectly via systems linked to the US.
In US dollars. Yeah. Or not.
Or banks
Yeah.
where shareholders are US citizens.
Yeah. Okay. Yeah.
So they also can be hit.
Yeah.
Yeah.
Both ways. Again.
Yeah, it's a very fluid situation, and I'm not yet that optimistic about the so-called economic recovery of China, because there is a lot of noise, a lot of Chinese news,
Yeah.
but I do not see a lot yet, because we are not able to travel, means also the Chinese are not able to travel. And if in loads of the regions where the Chinese were building their influence, you are not able to go there and to promote yourself and to do business and to deal and wheel,
Yeah.
you do not progress really.
Yeah. Yeah.
So all of that is going to be, if implemented, or the Silk Road, it's going to be later than
Yeah.
what we thought.
Because in the last talk you mentioned that, for example, all the growth in energy was mainly in China or mainly in Asia.
Yeah.
So there is where people were looking at, okay, then we can still grow because Europe is either stagnating or going down. The US, similar paths.
Yeah.
Is that so? This very faint recovery that we're seeing, is it then not completely under threat now that we also have this China-US relationship going sour?
We are not yet out of the doldrums. No. I think that we, on a global scale, I think we are looking for the bulls and we don't see the bears.
Yeah.
We look for the daisies and we do not see the roses. They look nice, but if you grab them,
They've got spikes. Yeah.
hurts you.
Yeah.
China is not yet there. India for energy. Yeah. We look at China, but India was last year the largest growing in percentage.
In energy.
Yeah.
Yeah.
Is also not yet there. The Middle East is still locked down.
Yeah.
Yeah.
How about Africa? We also have a question about that. Is
Yeah.
the energy in Africa, it's maybe not in that sense, if you mention all these big players, enormous, but it grows as well. How's the impact of COVID-19 there on energy?
For most of the African oil and gas producers, oil price slumps are hitting them harder than here. Yeah, Nigeria, Angola, Equatorial Guinea,
Yeah.
Algeria, Egypt, Mozambique. Yeah, they are feeling the pressure, and at the same time, most of the investments that were planned were either from the US
Oh, yeah.
or Europe
Or China.
or China.
Yeah.
And all of these investments are either delayed or energy companies are even getting out.
Yeah.
Yeah.
Is it mostly European and US that's getting out, or is it China also?
Mostly European and US, yeah, Shell also, but the Chinese are under extreme pressure also, because they have their own economic issue,
Yeah.
and at the same time their clients are not able to pay their bills.
Yeah.
And yes, you can take it over in the Chinese way, but it's not the right approach for an African country to hand over everything into the hands of the Chinese, because then you are doing the same as what you were doing years before
Yeah.
to us. Yeah, it's not. But and on the renewable side, yeah, okay.
Yeah, but maybe that's the same similar story, like you mentioned. And money, if there's no money, then there's no investment. So also not in renewables. Could be that the green recovery also takes that into account to a certain extent, but I don't think so. But it's
I can see some extra emphasis on solar in Algeria, Egypt, maybe Nigeria,
yeah.
but the rest of the countries, large-scale solar or wind, it's expensive.
Yeah.
Especially if you know that you are producing oil and gas. And yes, you are maybe at this moment not getting the revenues that you want or that you legally should have gotten.
Yeah.
But if you put that in place, you can set up an economy that is able to go into an energy transition based on the revenues.
Yeah. That was the idea, probably. The revenues of the hydrocarbons will pay for your own
right now
transition.
there
Yeah.
are not many African oil and gas producers that are making a buck.
Yeah. No, I can imagine.
Yeah, because oil and gas production in Nigeria is something else than in Saudi.
Yeah. It's still a lot, but not
It's-
insignificant.
No, but also the costs are.
Yeah, I think you have it.
I have.
This one.
The costs in Nigeria, according to CNN, cost Nigeria in total
About $30. Yeah.
$31. Saudi in total 9, 10. So
10, yeah.
at 30, Nigeria does not make a buck,
Yeah.
and Saudi gets 20.
Yeah. They need 80, but they get 20. Yeah.
They get 20.
Yeah. Okay.
Yeah.
So it's also a big problem. So actually what you're saying is that these countries, that the developing countries, not only Africa, Brazil probably the same. So they are already somewhat behind in the recovery, not recovering at all maybe. Yeah. And now they are get double hit. So
they get hit on every single side.
Yeah.
On the income, on foreign direct investment, on possible interest for new projects, on energy transition strategies, on all.
Yeah.
And then also maybe they get corona. It is a dark.
It is dark, yeah.
Continent, and still I say it has the potential to be extremely healthy and wealthy.
Yeah, but not right now.
In 2020, no.
No, I can imagine. Yeah. You mentioned one of the other things that last time with the utility companies and oil companies like Shell. So I have to give you credit for that. You become famous now. So you said, okay, I cannot imagine that the dividend from Shell can be maintained. Well, that happened. They still paid a little bit, but not what they used to do.
No.
So good one on that. But the other thing, so did indeed become these, European utility companies or energy companies, you said, okay, they might be a bit vulnerable for foreign oil companies to take over. Is that, do you think that happened, or is that?
The simple answer is yes, but not yet as much as I thought so.
Okay.
And I have example.
Yeah.
All of the IOCs and oil field services and utilities like Enel and Edison and Iberdrola, etc. They are at present extremely cheap.
Yeah.
Now normally our pension funds, ABP, etc. They will not say it, but they will be also on investment spree.
Yeah.
If they have still money, and we all know
they do
have still money.
Yeah.
This is the time to buy.
Yeah.
And for large-scale energy-related sovereign wealth funds, including the one in Norway.
Yeah, I was just about to ask that.
Everybody thinks they are going extremely green. Because that was in the news. Norwegian pension funds shuns oil and gas.
Yes.
First of all, the only income of the Norwegian pension fund is the Norwegian oil and gas sector. So it's hard to shun their only revenue base, because that's the base of the Norwegian economy.
Yeah.
Now, they did not shun, they just thrown out very small oil field services companies that some people even never heard of.
Yeah.
And they are increasing their investments in others.
Yeah.
Including the Norwegian pension fund is heavily investing in Saudi Arabia. Oh yeah, that's the largest oil producer. So the largest European.
They're not by any chance investing in the solar fields of Saudi Arabia.
Yeah, but that's money of Saudi Aramco. So it's oil, and oil is funding something else. Now, what we have seen, and most probably this is the same case for all the other sovereign wealth funds, they are trying to pick the cherries out of the cake now and are investing heavily in very interesting oil and gas companies and oil field services. One example you see here, the Saudi PIF. 8 years ago, nobody knew it because it did exist, but it was extremely small. Now it's the owner of SABIC plus Saudi Aramco plus whatever. So it's extremely large.
Did they not also last week or this week transfer 40 billion or something? From the reserve to the...
They got another 40 billion from another Saudi sovereign wealth fund. And that's almost, I think people should relate that to the payments that Saudi Aramco, PIF, needs to pay to SABIC, PIF. They need to pay still 70 billion. So this 40 billion can help. But they bought for 484 million in 2020 into Shell.
This is new investment.
828 million into BP.
But this is new investment. This year.
408 into Canadian Natural Resources.
714 on Boeing.
Yeah,
interesting one.
But also in total, and I miss or I'm not seeing it, but they also bought into Equinor. And Equinor is Third Oil. That's the moneymaker of the Norwegian.
Yeah, it's not here, but it's
pension fund.
Yeah.
So they are slightly buying into the competition.
Okay. Is it only Saudi Aramco, or is it you mentioned Norwegian?
This is the PIF then, because they are showing it. You can say Adia in Abu Dhabi is doing it. Mubadala also Abu Dhabi. Mumtalakat in Bahrain. Kia in Qatar. They are buying, and what you also see, and there is where Qatar is more clear than Saudi. Qatar Petroleum, national oil company, did 50 years long almost nothing. Then Qatar is buying one asset after the other internationally. Brazil, Mexico, Angola.
So everything that is cheap now they buy.
It's cheap. If you want to make a buck,
this is the time.
It's the time.
Is it because that's something? For example,
it's also a danger.
Yeah, it's a danger as well
for us. Related to another question we had today. We are getting more and more reliant for certain natural resources of national oil and gas companies, because our former energy supply security companies, Shell, BP, Exxon, Eni, they're starting to lag behind. And not lag behind in technology, no, in access to energy reserves and access to the infrastructure, or they are just being bought up.
In the traditional sense, so traditional infrastructure, which is still the main, I understand, but for the other parts, the same.
I can easily imagine to see in the next 5 years Saudi-colored downstream gasoline station on the A12.
Oh yeah. Yeah.
If we have Libyan national oil in the Netherlands, with the gasoline stations, and in Belgium, why not the largest one?
Yeah, that's true. Yeah.
And
Is
why
it-
not buy up
Is this also an interesting point?
downstream Shell?
Yeah, then why not? It's an interesting point because I think that Germany, in this sense, made as part of their recovery package also for this oil national companies,
Yeah.
national champions, they try to protect them.
Yeah.
So I think European-wide people are talking about it as well, also with relation to energy, because you don't want to be too interdependent.
No, but
Is that something that can be a reversal of this trend?
we have seen that this was able to be done when the Chinese once wanted to buy themselves into the US.
Yeah.
When a certain company wanted to buy into BP. When Shell wanted to buy an Australian E&P
Yeah.
company, Australia said, that's Australian, that's not going to be Shell.
Okay.
Yeah?
Yeah.
Now, so, yes, it is possible.
But it's not likely.
It's not likely. You mentioned Germany. I do not know one single German oil and gas company
No, yeah,
that
okay.
has not extreme links to Russian oil and gas companies.
Yeah.
Yeah, you almost are asking yourself sometimes, let's say about Wintershall, are they now more German or more
Yeah.
Russian?
Yeah, but it could be that they are, well, not sorry for it, but they're at least in the future,
Yeah, yeah,
I
no.
think that is the main question.
Yeah.
Probably in Germany they were thinking about automakers and things like that, but in not necessarily Wintershall and other companies. But it is a valid question, I think. It's like,
It-
okay, do we want to have this situation?
If you want to have a globalized world, then you should be, if you are really a globalized
Yeah.
person, you say, I don't care.
Yeah.
Yeah? But we have seen if you do not care, you will get corona, and then you end up with a situation you say, hey, wait a minute, the world is still different than what the people say.
Yeah.
Yeah? It is, as long as oil and gas is an economic, strategic sector, and then I'm not even talking about employment.
Yeah.
No, it's a natural resource
For energy
that
security
you
purposes.
need
Yeah.
for chemicals, for energy, for whatever. You need to make sure that you have at least energy and security of energy supply.
Yeah.
And that is the only option is diversification, because this is then official. But how many rich Saudis or Qataris or Russians or have less than just one single share less than what is needed to
For the majority shareholding. Yeah.
or that they need to announce that they have bought shares.
Yeah.
Because if you just spread it
Yeah.
over a lot of
Yeah. You don't have to
entities,
say it. Yeah.
you do not need to say it.
Maybe just because we don't have that much time, but I'm interested in that part, because is it necessarily a bad thing? Because it is also not in the interest of these kind of sovereign wealth funds to start messing with the profitability of the company. So, I mean, how much risk is it actually? That's my main
You
question.
can make both
Yeah.
cases. It's not a bad thing as long as both parties are into a friendly economical, political, social
Yeah.
relationship. I was brought up at university where one professor once stated, wherever there is a McDonald's, there is no war. Well, okay, this professor is now, I think, already out of a job. Yeah, but
I get the point. Yeah,
Yeah?
yeah.
because that's not the case. But you could argue, and I think maybe you should argue, that if you intertwine economies, intertwine strategic economic sectors, you make it harder for both parties to get angry.
Yeah.
China and America have been angry now since World War II.
Yeah.
They have, up till now, China did not attack America directly,
No.
and America did not directly attack China.
Yeah. So yeah, in that sense, you can go both ways. It can be a pressure, means of pressure, but it can also be a means of avoiding the pressure.
It's an option to get people on the same strategy. I think for the sovereign wealth funds is to spread their own risks
Yeah.
and to mitigate the ongoing changes outside of their own oil and gas sector.
Yeah. Exactly. Yeah.
Yeah?
Okay. Maybe just as a final remark from your side. So if you're an oil company or a renewable energy company or an energy company in general, what do you think? What is the best way to go? Just wait and see, or do you need to go invest somewhere else?
That's an investment strategy question. If I'm a renewable one, I would do two things. I would be talking to a sovereign wealth fund or an Islamic finance fund, strangely enough.
Okay, yeah.
Not to another fund. They have the cash, they're interested, and in Islamic finance, they are even taking the risk up till you have paid off the debt.
Okay.
Then they're the risk taker. And I would invest, because even for renewables, it's now cheaper. Whatever. Every single service that they need to have, and that's almost the same services as oil and gas companies, they're now much cheaper. You can make contracts at levels that if you would have thought about it in 2019, you would be laughing. If you want to expand quickly, go on a merger and an acquisition path.
Yeah.
Because
now it's cheap.
Share prices are cheap. The PA ratios are very interesting, and money is still available and cheap.
Yeah. Okay. Good. Thank you very much.
Okay.
In that sense, I think it's a nice hook also to our next webinar. Next week we'll talk about the first one, hydrogen, which we didn't mention a lot, but is already on. It also has great potential, of course, but we'll see how that goes. Next week we'll be talking about hydrogen in transport sector, and also on the finance part, which nicely connects to the last question I mentioned you. Like, where are we going to invest? How does COVID-19 impact this finance part for renewables? So I hope to see you all next week. Cyril, thank you very much again, and it was always a pleasure to have you here. So thank you, and have a good afternoon.